Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. All right, happy Thursday, everybody. It is not Wednesday, so we avoided all the excitement of Wednesday. Normally Wednesdays are insane, and so this Thursday has been nice and calm, nice and level, which is always nice. So I want to say thank you to the solid 8 viewers on this live stream. I know I feel like I'm talking to myself sometimes, but hey, you know what? It's fun anyway. So thanks for a couple thumbs up. You guys are great. All right, we have a lot to talk about. There's some very, very interesting things happening. The biggest one is we have a death cross coming up very fast. So our 50 is sitting right here, just below 28,000, so 27,971. And then we've got our 200-day, which is at 27.5 or 6. Let's see, what is it? 27.588. So we are about $400 apart. No, less than that. No, yeah, about $400 apart. And this is going to happen in approximately by September 11th. So that is the day that we're probably going to be getting this death cross. And what does that mean? Well, let's kind of look at that first, just because it's a big item. Thanks for your comment dilemma. It helps me know I'm live here. Okay, so that is coming up. The last time we had a death cross was a long time ago. Our golden cross happened on February 6th of this year. Thanks, Richard. I appreciate that. He says you're not talking to yourself. We are here. Beautiful. So our last death cross is right here, January of 2022. About a year and 9 months ago. That is a long time ago. So your first instinct might be, oh man, if that's the case, are we going to be going a full year before we see golden cross and whatever? No, because we can't look at this scenario to measure this, because the emotions of this death cross are way different than the emotions of our current death cross. This was at the height of the bull market. We had pulled back and we were about ready to go for another run, and then that kind of fell apart, and that's where we got our most recent death cross. But I kind of want to just point out a few things. What did death crosses mean? Does it mean we go straight down? This death cross, it caused a little bit of a sell-off. Normally you would pull into a death cross, so this is a little unusual that we didn't pull up even further into this death cross here. But we pulled down, and then we kind of slowly climbed, and our rejection point was actually the 200. So even though we had a death cross, we eventually crossed the 50 and went all the way up and rejected off the 200 before really pulling into our bear market. And this is something that I've been kind of, I kind of expect that this is a real possibility as well. So we are all the way down here at, what's today, 25,850 or so. With a death cross, normally you would pull into it, and it might be that this move here was our pull into the death cross, so we might have already gotten it. If not, we would most likely pull up and at least reject off of the 200. I still think that there may be another one here. If we reject off the 200 and then we put in a higher low and then we retest it again quickly, this might be just a nothing burger. We might just, we could sail right through this. And just because we're getting closer to the halving, that is a likely possibility. But I just think that there should be some period where we at least come up and test this, even if we did fall off a little bit. But let's go ahead and look at the bottom of the bear market, because this is a bottom of a bear market where we hit the bottom and then we had a golden cross followed by a death cross. Let's just go back and see what happened before, because here was the exact same scenario. In fact, we had a triple here. So we had our golden cross coming off of our bottom. I'll make this just a little bigger. Here's our golden cross coming off of our, absolute bear market bottom of 2018, and we had a huge run. Our run now isn't this big, but here was our death cross. We pulled amazingly into the death cross. So even though we had kind of rejected off the 200 and pulled down pretty significantly, we still pulled up into it. So that was pretty cool. And then of course that fell apart, and we came back up and we crossed it here. We were actually in decent shape, and then everything fell apart over here. But this death cross was followed by a golden cross. How many days later? About 115 days later. So, that's an interesting data point. When we had another one, so this was another death cross here, and we had our COVID crash and all of that. The golden cross that brought us into the bull market of 2021 happened about right here, and that took us about 56 days, so about half the time, just because we were more mature, we were further along. So another way to look at this might be, let me take the exact same chart and put in our halvings. So there was a death cross that kind of happened right before the halving, and then right after the halving we had our golden cross, and then we were on our way. How far away from the halving are we? We're pretty far away. So it may be that we could be doing something a little bit more similar like this, a little bit more preliminary. But the tenor, the texture, the flavor of our market is different than this one. So that's an interesting data point. Let's go take a look at this bear market here. See if it was any different, because this was our bottom of the bear market. We finally had our golden cross, and then it was not long after that we had a death cross. So we had the same scenario in all three bear markets. So we did have a death cross, and then it didn't take long till we had crossed both the 50 and the 200, and then we were on our way, and we did not cross back down. But let's just see how long this took here. From death cross to golden cross, 44 days, and it was because we had a ton of momentum. So anyway, we can't be completely shocked and surprised that we are looking at a death cross right now. But we have to remember is that with the halving coming up soon, with the halving coming up in April, we're going to have a little bit of we're going to have something here before we build up into the halving. And so this is pretty natural, and we just kind of have to figure out, where we go from here. Well, so let's talk a little bit more about what we might expect in the short term. So this is sort of, so I was talking with the pro channel last night, and originally we had this line in a couple of places. So I think originally there was oops. Let's see. Okay. That's what I was trying to do. We had been watching this vertical resistance. So there was the support line was here, and then we had our our kind of wild run up and down, and now we're consolidating below this line. And normally, this the flavor of this is a little bit different, because what happens is if we have a solid support line that is well established and it breaks, normally we would fall off. Like there would be, I mean, technically we have a low and then we have a lower low, but with this much downward pressure on the declining resistance that we're looking at, this should have fallen off worse. And instead, we just have wick city here. We have so many support wicks coming up off of this. And so it's so strange that we've broken a new low, especially after really a couple of violent moves. Where's the follow through on the selling climax down at the bottom here? That's what's missing from this. And what I was speculating, especially with the, I was like, where does this line belong? It used to be, maybe it was here. Used to be, I don't even know where it is. Like now that we have this data here, this line doesn't make sense. So the only thing that does make sense is that we now have a sloping, decreasing support. And instead of this being a falling wedge, where we have decreasing resistance and flat support, our support is slowly moving down, which means that the bears are not really getting it done. The bears are in control because they are pushing. We are seeing newer, lower candle bodies, but they're not really getting it done. There's a lot of buy support here. So the angle of our resistance is not flat. It is angled down. This is a falling wedge. Falling wedges are bullish. That's a completely different situation than a, either a rising wedge or a descending triangle. Those are both bearish because you're whittling away at a support that's losing its momentum. Well, the bears are they're trying to pull it down further, and there's just not enough sellers. And when the sellers do show up in the market, the buyers are pulling it back up. And even though the bulls aren't in control because they haven't moved this market up, these wicks down here are telling a lot of the story about how the bulls are very close to matching the bears. And when the bears are fully exhausted, there should be a move to the upside of some kind. It doesn't mean that we're going to, just suddenly put in a new high. Like, I kind of feel like that's a pretty low probability. But how these wedges usually work is you define one of your sides, and then you go up and find the other side, and you define it again. And then you would come down and define it again, and then you would kind of get closer to where the resolution happens, and then you would break out to the upside. That's generally how these things work. So this has become slightly more bullish than bearish just because of the soft move down. Well, the longer we do this, the better, because every week our 50 week is getting higher. See our 50 week here? The higher this gets, the stronger, like the sooner we get to the end of our kind of our fears, because this is the only major line within view. And these types of things just kind of become magnets. Whales love to play with these big averages that are messing around. And so I was kind of expecting us to fall off a little earlier. I thought maybe we'd get a little bit more of a bounce and then drop off. Either way, the long exposure needs to be limited, because breaking above this 200, now that we've really rejected hard off of it, is going to be a tough thing to break. And we're going to need some structure to even get there. And now we've got a death cross. So there's a lot of bad news things all in our way. And this 50 week is a magnet. So let's just look at a couple of worst case scenario targets. I still feel like this 50 week is a major target for finding support, and that is sitting at 24,123. And this is going up about $150 every week. Thereabouts. $150 every week or so. It's going to go up a little steeper because 50 weeks ago was here. And as we get rid of the FTX drop and some of these really, really bottom lows, it'll kind of accelerate to the upside until these lows are gone, and then it'll start flattening out. So, in other words, we've got months. We have months of a pretty steady increase in the slope of this 50. And so the longer we can kind of float and hover and whatever, we eventually may touch it, but it'll be less devastating if we do. So either way, we are still waiting for the halving, which is only here. On a chart that looks like this is not too far away. It's pretty crazy. And this line here is still intact. This is breakout zone for if we can get there. So that would be one of the sort of worst case scenarios. So if it happens sooner than later, 24 should be pretty solid support. So that's a thing. You need to look at your portfolio and say, okay, let's simulate what happens if Bitcoin drops to 24 suddenly. What does that do to my portfolio? Can I handle it? Am I prepared for a drop like that, and that kind of thing? And then the worst case scenario is probably on the monthly, because our monthly line is here. This line is 23,293, so it's about 23,300. So if 24,000 doesn't hold, we could wick down, or we could eventually trade down to about 23,300, and then it would be very weird if we did not hold this. So I kind of feel like that's kind of our spot. But just being on the monthly chart, just wanted to show you, look how strange it is that month to date our range has been so tight. It's really crazy. Our high is 26,150, our low is 25,350, so we're trading in an $800 range, and it's been this way all month long, and we're on the 7th. So first 7 days of trading, it's just been so quiet, which makes these things a little hard to read. It's a lot easier to read when you have big wicks and things that are kind of pointing the direction of the next move, but when things are fully quiet, it's like, this is really odd. So let me get back to the daily. So our daily, we've been supporting this line. We're just sort of trailing down, but I've told the pro channel, I still expect some kind of move to the upside. If we get a move to the upside and it's kind of weak, we hit about halfway through here, I would be very interested in kind of reducing my long exposure here, because I still feel like that the 50 week is definitely a reality. So if we kind of get a little bit of a bounce, and then we come back down, we could kind of relieve the pressure of this, kind of the fear of breaking this line, and then we could kind of get that out of our system, and then we'll be ready for our next leg up. So that's what I'm kind of expecting short term, and the short term charts are kind of supporting that. So if I go to the 4 hour, the 4 hour is starting to curve up a little bit. We're in a red zone, and our 50 is dropping fast, because 50 periods ago on the 4 hour chart, we're up in here. So these are going to drop really fast until everything drops all the way down. So probably in less than a day, our 50 is going to really be close. And it should not be hard to exit the red zone on the 50, or excuse me, on the 4 hour. Exiting the red zone on the 4 hour is bullish, so this would probably give us some kind of a bounce. But I wouldn't get too excited about it. Where we rejected perfectly off the 200, I don't know if we'll get there. It would be pretty amazing if we got that high. That would be 27,300. It would be pretty, that would be unusual. But short term, we should get something. So we should get something out of this. And I would kind of expect maybe this is our line, 26,600 or something like that. Would not surprise me if that was the case. And then we'll just see what the chart looks like from there. But let's look at the 1 hour. So the 1 hour has done several attempts of exiting the red zone. Here, there was a quick attempt. And then these were just one candle wonders. And then this was our actual first time we really exited it for a while. And then just this morning, we just had some volatility. I don't even know what happened with this spike and whatever. But now we're trading in a much better place. We're definitely trading in a higher range than we have in the past few days now. And so this exit of the red zone on the 1 hour is actually looking pretty good. If you're wondering what this line is that we rejected perfectly on, it was a 4 hour line. I put it on right here because we'd seen these bodies absolutely perfectly lined up. There's four right here, and then number 5 was here. We didn't really respect it here, so anyway, it may not be relevant, but that is kind of curious though that we rejected just an hour ago right here. But it's still good. I mean, there's definitely a lot of resistance flipping to support here. So I would expect 25,850 to hold over the next, several days, just because of the amount of work we've done in this lower range, and we broke up out of it and finally put a candle body up here. So there's a lot of short-term reason to think that we're going to move up a little bit. How far we end up, I'm not sure. And then the even smaller time frames, I don't know if they're super relevant. So anyway, but yeah, so you can see the 200-hour moving average dropping really hard because 200 hours ago we were in the middle of this section here. So this will drop right down until here, and then we'll be flattening out. So some interesting stuff. All right, I'm gonna catch some comments in the chat. Let's see. Pepe says, "Hi Calvin, that's awesome." Shobham, "Hi there, I want to work as a thumbnail designer or video editor for you." I know I'm not great with that, am I? My aesthetics are just not there. It's kind of one of those nerdy guys that they're good at one thing, but everything else is a shambles. You know what I mean? That's kind of what it is. All right, so Richard, are you trading your way up to the next top, or do you have any long positions, and what are your top targets? Well, I'm kind of, you know what's funny is I don't really play targets. I trade more the shape of the chart. I will trade a trend until it completely loses whatever direction it's going. So my my kind of style of trading is to look at look at the momentum. We're getting lower highs, lower lows, and then a momentum shift happens and things change direction, and then I try to get aligned with that trend. So but to be honest, I am also looking forward to that halving, because the halving event should be bullish, and I definitely have long exposure because with all the chatter and all the things going on with the grayscale and the BlackRock ETFs and all these things, when that happens, Bitcoin will launch, and I don't want to be in a super bearish position getting there. So no, I am long. I am long, looking for our next leg up, but I'm just being careful where my, there's still potential drawdown gonna happen if we need to hit the 24,000 mark or the 23.3. So I'm being very careful there. I'm just reducing the amount of long exposure I have if we pop up a bit, just to put my portfolio into a good place. As far as tops, yeah, I don't really trade them, but my thoughts are, I kind of feel like it really, the ETFs are a loose cannon because institutions FOMO just as bad as retail. Um, in my experience, a lot of hedge fund managers, these 30, 35-year-old guys with no experience, they somehow get themselves a pile of money and think they're invincible, and they just make stupid decisions. And so I can see if there's an ETF and people are just dumping money into it, it could go way higher than we would expect. I know there are a lot of voices out there that think, yeah, 100,000, maybe 150, like that's pretty decent for this move. Things could get really wild, but I'm just gonna have to kind of play it as it comes. But I also think that with an ETF, there's good and bad because there's a lot of money in the world and there are a lot of enemies of Bitcoin. And if people can short a spot Bitcoin ETF, that would be, that would create unnatural selling pressure, and they could reduce the price instead of make it launch. So there are both sides to that. So I'm conservative. I'm kind of thinking conservatively. Hey, we're about 25,000. Do I think we could double or triple over the next few years? Absolutely. So I'm kind of thinking, yeah, 75 at a minimum. But I still don't know if we'll really go super high. So I'm trying to be, kind of reserved. I don't want to drink too much Kool-Aid because I've experienced every one of these moves. Well, at least from 2012, going from $15 to 1,000, that was insane. And then from 3,000 up to 20, and then up to 70, these moves were wild. And the emotions at the top here are really challenging to deal with. And so what I wanted, I'm going to try to be a little bit more level-headed and cautious, looking for potential tops and whatnot. So we'll see how it goes. It'll be fun. Hey, Jorge, and Inherent says hi, so that's cool. Thanks for saying hi. That's awesome. Muhammad, hello. And then, so Richard says, that is my position. I'm all in for 2025. I don't dare trade anything. Meanwhile, you're probably spot on. There could be some shakeouts and different things, but if you're hanging on for a good long move, it's less of a number than a time. It's kind of the distance between these tops is what's probably the most important. And so if we get to a certain time, and the top should be here somewhere because from a time basis we're there. Whether the market looks toppy or whether it doesn't look toppy, the time has been a better indicator than anything. So if nearing mid 2024 or getting close to 2025, we're to a certain point, it's probably time to start taking a little off the top. So that's what I'm expecting. Pepe says Link looks to resist better than the other alts. Can you check it briefly? Sure. Let's take a look. Actually, let me just look at Ethereum really quick before we move on. So Ethereum, just check anything on the weekly. So the weekly 200 and the weekly 50 are holding. So there is strength in Ethereum, even though I've seen some bearish things, and I know our Ethereum price is sagging a little bit. I really feel like there's something here. On the daily, we're doing exactly what we were doing with Bitcoin. Really kind of seeing some volatility, but our bodies are just quiet as can be. And this is one of the reasons why I'm bullish on Ethereum. I haven't shown this chart in a long time, but this is the Bitcoin to Ethereum ratio. We've been threatening to break out of the red zone on the Bitcoin Ethereum daily for a long time. Almost a month. And at some point we're going to break up and Ethereum is going to start outperforming Bitcoin in a serious way. Well, so if I take this chart and I zoom out, I want to show you, actually I'll do it on the weekly so you can see it. We've been doing a wedge on the Bitcoin Ethereum valuation for ever since January of 2017. This is this is getting older and older. So we're almost 8 years because we have all of 2017, So 2, 3, 4, 5, 6. Okay, about 7. Okay, almost 7 years in this pattern, and it is like the resolution happens in December of 2024, and what likely happens with a channel like this is we trade in. We break out, and then we move the distance bottom to top of wherever this thing started. And I think that during the bull market of 2024, 2025, this upcoming bull market, I think we're going to see Ethereum rise to heights that are going to be pretty awesome. Let me just say that. And so if we break out the top of this, that means Ethereum will outperform Bitcoin. And if we break out of this and hit the target, it will do extremely well. Well, there are some fundamental catalysts for that, and that is, I noticed that ARK Invest submitted an Ethereum spot ETF. Man, if Bitcoin spot ETF gets approved, it will send Bitcoin. But if an Ethereum spot ETF gets approved, I can't even tell you. Ethereum will launch so hard. It's not even close. I don't think people realize. Like if I go to CoinMarketCap, the market cap of Bitcoin is 500 billion. Ethereum is 200 billion. It takes a lot less money to move Ethereum than it takes to move Bitcoin. And by 2.5 times, it's 2.5 times bigger. And so if you were able to expose the same amount of buying power on Ethereum in the form of an ETF to that same amount of money that just is floating out there, it would be unreal. I just think there's a lot of fun that is going to happen in the future eventually with Ethereum. So anyway, we are sloping down. Like, I've seen some people really poo-pooing on Ethereum versus Bitcoin, but these long, drawn out, slow slopes where you're not really dropping off, like you're not losing anything. It's where bears are in control, but they're weak. When we finally break out to the upside, it just sends. So anyway, that's my thought on Ethereum. So short term, we're just doing exactly what Bitcoin is for now. We're pretty at parity, and we'll get there. But we're still waiting. This is the breakout line for Ethereum. We're hopefully getting scooped up by these two averages, and it'll pull us back into our range. And if we can get enough to start closing above, and it's only 1935, it's not even that far away. It just needs a few $100 and get a close, and we'll be off to the races. So, all right, let's take a quick look at Link. Let's see, where's Link? Here we go. So Link on weekly is in a red zone. It's definitely been ranging for a very long time. But I think when it finally breaks out, it should do pretty well, because if you think about it, if we're trading in a range of around $5, $6 to like $9, we're in a pretty tight range. About 80% gains up and down, perhaps. But when you think about where we were, about $50, and how critical Link is to the DeFi ecosystem and everything else, once we start getting better, once we get out of this red zone, once we break above our resistance area, once we're into full bull market mode, like months ahead, yeah, do I think we could hit 20 or wherever, somewhere up in this area? I think so. So there's probably a decent multiple happening on Link. Short term, let's just look. Yeah, nothing crazy. We were sort of in a declining channel, and we're moving up. I haven't done anything long on Link because our most recent low was here, and we have not had a higher low. So I'm waiting for some sort of pullback to establish a higher low before I'm convinced that we're ready to turn the corner here. So that's kind of how I'm trading that one. Let's see, what else do we have? Calvin, do you believe in any of the fundamentals on any crypto other than Bitcoin or Ethereum? No, I don't. I'm I've just been in this game since 2012, and I've never seen another crypto that has held its value the same way Bitcoin has. Ethereum's been the exception. So that one has kind of made its mark in the world, and I just don't think it's disappearing, especially with the burn and other fundamental things going on. All the other coins, they'll be around. Nothing's going to take them off, but it's going to be a while before some of these become so like ingrained in the ethos in the world of crypto that they've kind of established a market position that's, you know, unmovable. At this point, you can kind of replace almost everything else out there with some of the majors or each other. So there's just a lot of cannibalism out there in crypto land. The newest shiny object comes and all of the majors lose lose market value versus these meme coins and whatever and all these fly-by nights. So until they can handle a bear market and not lose like 95% of their value, then you've got something at least worth looking at. But I'm not convinced quite yet. Liliana says, "Hi Calvin, why did you stop doing the giveaways? Let the giveaway return." Well, I was using the giveaways to kind of grow my channel. I might be changing directions. I've been considering starting a hedge fund, and so I might be. I might have to disappear. I'm not sure what all the rules are, but I've kind of been looking into that just to take what I do to the next level and all of that. So that's sort of what I might be doing. So giveaways, I don't really have a huge incentive to get everybody all rallied around a certain thing. So we'll see. All right, Richard's back with. By the way, do you have any Solana? Do you have any predictions for that? Let's see, Solana. Yeah, Solana. Solana's got a pretty important line right at 26.30, and we're just in a leg down for now. When we get our next leg up, we'll probably revisit this, and then there's a lot of blue sky above Solana, so I can see it coming back in. And coming back, it just feels like Link. That we had this bear market, we've ranged sideways for a long time, and the market's sort of asleep until the bull market comes. And a lot of these alts will outperform Bitcoin once we get going. So especially ones that a lot of people are looking at. So yeah, anyway, I haven't looked at this chart for a while, so any support lines, there's kind of one here. Looks like right. Yeah, this candle body started back here. So this is March of 23. That's our most recent support line. And that, you know, whether this holds or not, I don't know. This needs more time because same problem. Most recently we put in a new low, which isn't great. So we want to see a new high and we want to see a new low that's higher. And this just hasn't changed direction. So whenever that happens, whenever we get a high with a higher low and a higher high, now we're talking. But you know, even if we manage to find a bottom here and made it back to the top of our range, that's a 33% move. Not a ton in crypto, but you know, there are gains to be made. So yeah, nothing. I'm not in a position on Solana yet. There's not enough evidence to say that it's ready to rock and roll. So anyway, guess we've been at this for about 40 minutes. Hopefully that gave you guys some things to think about. But yeah, it's a tough market to trade because when you're trading in such a tight range and nothing's happening, it makes it a lot harder to trade because you know when you see some enthusiasm or you see some long selling wicks or buying wicks or something, it's like, okay, all right, we're heading the other way for a while. But when things are fully quiet, it's like, you're just looking at little nuances, you know, smaller time frames, where's our momentum, that kind of thing. But we are slowly trending down, which means the next move should be to the upside. So whenever that happens is what I would expect. Is it 100%? Not always. because here was a slow trend to the downside, and then we dropped. Here was a slow trend to the downside, and we went up. So it's been kind of odd. We're like doing these slow trends and then a big move. So my expectation is most often, if you have a strong move, there's usually a mirror. So our mirror was here, and then we had a mirror to the upside and a mirror to the downside. Usually our next move should be to the upside. So I'm expecting something to the upside. I don't know how intense it'll be, but we'll see it when we get there. All right, guys. Thanks for being here. I appreciate you supporting me, and we'll catch you on the next one. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.